and I'm just got the news on in the background just to kind of see what the
What's
overall
going
kind of.
down?
Well, it's interesting really because the market had a bit of a surge yesterday. I don't know if you saw the Nasdaq, but I got a friend who trades the Nasdaq, and
Hmm.
because of that, I do check it out, and where all the other markets may well be putting in a lower high. Oof, God, that was a bit of static there, mate. Yeah, well, while the other markets are putting in a lower high, the potentially the Nasdaq is surging to all-time highs. I'll show you the chart on that.
Oh, how interesting.
I mean, in fact, let's get to the market first. We'll talk about the Nasdaq in a
Okay,
second, just because we've got to do the pound trade,
we do.
and it's an interesting one today because we do actually have some services PMI numbers from the UK, which might make trading a little bit muted in the FTSE. Now you can see the FTSE is jammed right between the daily and a monthly pivot here, which suggests that it will probably find some support here. But I am short this market, so I'm looking really for at least a weekly pivot test, if not the trend line, if not a closing of a gap, if not a potential double bottom. And if it got down to the double bottom, actually, I'd be a bit more interested in looking at the longs. But I'm not sure whether I'd look at the longs without while closing my shorts, because I just don't get why people would buy the market longer term. I understand. We'll talk about why the Nasdaq, the S&P, and the Dow are surging later on, but I think the bigger picture is still for some weakness around here. Yes, there could be an inverted head and shoulders coming down to this point, this point down here, which might well boost the markets to the upside, and I'll check that as we go. But as I say, I still think we're in a downtrend, and we can come to that a little further later on. But anybody interested in trading this short, maybe getting in here is not the worst thing in the world. There's a 40 pip stop, but we are aiming for the lows potentially, which is 160 pips away, or at least this trend line, and possibly the weekly pivot, which is about 70 pips away. So maybe let the market open, pop up a little bit, and if you're looking to get short as well, then that's the way to do it. Let's have a look at the pound, and then we'll get back to. Oh, hold on a minute.
Mhm.
Just want to make sure my screens were sharing them properly. Let's
Yep.
have a look at the pound, and then we will discuss the markets generally and see what might move it in what direction, and possibly what time as well that might happen.
Right, mate. Let's take a look at the good old cable here. And February started a whole lot better than January finished, I've got to say. So a couple of positive ones
Yeah,
so far.
yeah, good moves, mate.
Yesterday wasn't that great, I'd have to say, but positive nonetheless. So let's see what today brings. Today we have this bar as our trading candle. Let's see. Why did that do that? That's fine. Let's see what we can conjure here. Once again, there's no way on God's green earth that I would wish to go short here. But again, once again, we're not playing what I think. We're playing the bars. So this candle is the one that we will trade. We'll enter the market short if the market so dictates that. 10 pips underneath this bar, which will be at 1.2998. We can probably safely put that in the market now, I think, with less than a minute to go. I guess that'll get us underneath the daily pivot, so it's kind of against my religion, but we'll go in at the full 1% because we are getting in below, but yeah, it's still got potential to force price back to the high side if it does hit it. So that will be a sell stop at 1.2998, I think I said. And the stop loss will be 15 above the high, which we now almost have, which we now have. Okay, so the high is 1.30371. I round it up to 1.3038 and add 15, which becomes 1.3053. Okay, so that is our short order. Now the long will obviously be the reverse of that. So let's go new order buy stop. That'll be the same. 1.3053. And stop loss 1.29. Oops, 998. There we go. Buy, not buy limit, buy stop. 53 to 98, and order placed. So there we have it. The entry for the short is here at 1.2998. I'd like it a little bit further below the daily pivot, but at least it's better there than there, I've got to say. And the stop loss is 1.3053, and obviously the reverse of that for the long. 1.3053 is your entry. Is my entry, and 1.2998 is the stop loss. Should we talk about the pound whilst we're on it, mate, so we don't have to go too far away?
Yeah, I think that's a good idea. We've got data out later on from the UK at 9:30. We've got services PMI, which may well make the market a little bit muted. Not a whole bunch overnight that expanded on the speech from Boris Johnson. Really kind of like, the word on the street yesterday was all about climate and how they were going to deal with the climate issue. And Boris Johnson wants to bring forward the banning of petrol, hybrid and diesel cars by 5 years to 2035, which is it's a great pledge and a great election pledge, but actually he won't be in power in 2035. So it's kind of like one of those things. Yeah, well, this is the thing. When it comes down to it, the reason that they can't really have kind of electric vehicles really right now as the staple way to travel is because they haven't got enough charge points in much of the country. So he will have to start certainly implementing that. So that's really going to be one of those things that we won't necessarily know whether the 2035 will be deliverable, but we'll know whether he's actually, going towards it, because, as I say, he's going to have to put some things in place for that to.
Look, right now, it seems like a pipe dream, Ash, but a whole lot can happen in 15 years. So I'm not going to ridicule it.
Yeah, no, I agree, mate. Do you know, the thing is, I was looking at an electric car with my partner. We were looking at switching from a petrol to an electric, for financial reasons as much as anything else. But the problem is the range just isn't there. The one that we were looking at was 80 miles an hour. 80 miles range. And every year we go up to the Lake District, which is about 250, 300 miles away. So you'd have to stop quite a lot. Just to get up there, so that the battery range
from one part of that's kind of nearly the bottom to the top, isn't it?
That's right. Yeah, that's right. Yeah, our friends live up in the Lake District, which is pretty much towards the top end of the country.
Doesn't even get you into state in
It's mad, isn't it? It's mad. But the thing is, the point is, you'd have to stop 4 times just to get up there, with a half an hour break each time. So you're adding a minimum of 2 hours onto your journey.
That's until they roll out these. Remember we were talking about things to invest in. When was that? It was months and months ago, I know, and I mentioned this thing that they were going to roll out on the roads. And
yes, you did. Yes. I
can't remember the name of it now.
I can't either, but I do remember what you were talking about, and that you're absolutely right. That's what they'd have to do. But this is the thing, that's a huge infrastructure project, isn't it? To change the roads
massive,
to be able to do that.
Massive.
So we have all that going on, but that's not a market mover, as we know. So it's really going to be about services PMI today, due out at 9:30, which is in about an hour and 25 minutes. The interesting thing for me is there and this is the question about both these markets, because the FTSE 100 is likely to react to the pound one way or the other. If the pound is to strengthen, the FTSE will weaken, and vice versa. That's a rule of thumb. It's not hard and fast, but that tends to be what will happen over a longer period. We already had the interest rates left on hold, and at 5 to 2 to leave it on hold, which we know. So that's quite positive for the pound. But that reaction that we saw towards the end of last week, because of the. Sorry, was it yesterday? No, it was towards the end of last week, wasn't it? Because of the speech. No, it was Monday.
Or the one back.
The one down, yeah, the one down was Monday, wasn't it? Yeah, so we've already seen that. We've already seen the effect of the speech. Suggesting that the No Deal Brexit is still a potential risk for the for the UK and for the pound, and that caused a huge sell-off. So I just don't understand how we could actually then just completely reverse that sentiment and go all the way back to the upside when the sentiment was.
I think if we look at the pound in the last goodness knows how long, that's exactly what we've seen.
Right.
So nothing would surprise me.
Right. Fair play. Okay.
This is what makes it terribly difficult to trade.
Yes.
So unless you've got a nice bottom of range like we had this morning and overnight.
Yeah.
And I said this yesterday. I think if you're willing to trade the ranges, you're probably going to do okay.
Yeah. Well, there
is no reason or rhyme nor reason why this does this.
Well, I guess, and this is the thing about picking the right market. And I have to say, the FTSE 100 is a beast of a market to trade at times, And I'll show you. Actually, do you mind if I borrow the screen briefly here?
No, go for your life, mate.
I just want to show you what the FTSE looks like in comparison to some of the other indices. I mean, we're looking at potential downside here, but again, this is about the coronavirus. The coronavirus caused markets to have an extreme sell-off, but the recovery has really started already, and I'm going to call it.
Yeah, we've wiped out the risk immediately, haven't we? We've gone straight back to risk on.
Yeah, absolutely. Within a day, we're kind of back to risk on, and it's making it again a pretty difficult trade. But my thinking is why the fear of a lower economy doesn't have a hangover, and it just doesn't seem to. We're straight up in a nice trend. But obviously bouncing off this monthly the daily and monthly pivot, a fairly obvious place, I suppose, for us to bounce, and that's what's going on right now. Whether it continues is a question, obviously. But look at the S&P. This is the thing. When we kind of look around some of these other markets, this is why it's quite befuddling to some degree. This is the S&P potential lower high here. That's the interesting thing that I find. We took out this level just closing above this point here, but really just retesting this level here. And I am anticipating that the S&P to possibly carve out a high and then start coming down. The same with the Dow Jones Industrial, but probably a little bit cleaner in actual fact because it didn't take out a high, and that does look like a distribution pattern. Call it what we will. Looks like it's taken out some levels here as well. So it looks to me like the Dow Jones Industrials is putting in a sell signal in an area that it could well sell off from. Same with the S&P. But this is the one that I'm finding the most fascinating. The Nasdaq takes out its level, takes out its previous high, and it's not off and running this morning by any stretch, but that is a fairly strong bar, and I think, from what I can't say this for sure, but I'm gathering that this is probably a Tesla story. Tesla's up over 30% in 2 days. It's just a crazy stock right now. Up over 100% in a year.
What's happened? Has he discovered a better way to store energy, or what's?
Do you know what? I don't really know what the Tesla story is. I think that the question was about.
You're looking at buying these cars, mate. That's what it is.
Well, I wouldn't mind. Yeah, I wouldn't mind owning a Tesla. But if you were to look at a Tesla, a chart of Tesla, it is parabolic. I mean, I describe many things as parabolic, but this one is just astonishing. It just goes month, just two bars, just two solid green bars to the upside, taking out its previous area. And we were at 300 and something, and now we're at 900 and something per share. It's just crazy, what the move has happened. But that has dragged the Nasdaq up. Now I don't know whether Tesla will continue to the upside. It seems to be a fairly emotive surge higher, so I'm not sure whether that can happen. But yeah, so we do we have a Corona story or do we not have a Corona story? But it certainly seems at this particular stage that the markets right across the board are sweeping that news aside. Again, the FTSE 100 looking back on a 4-hour chart, looking like this left shoulder, the right shoulder at this stage might even be quite a high right shoulder, and we take off again. But I'm going to stick with the short, mate. I just don't I don't see how the world's second largest, arguably the largest economy, can suffer in the way that China has and it not have an impact. So even if this market pops up, then I just think we're waiting for data to confirm what I think everybody knows, which is that businesses have suffered. I may have to take a hedge, but I am short, and I'm short all the way down to the lows down here again. If they if that can happen, the with the FTSE today, the likelihood is that we will probably pause here for another hour or so while we wait for services PMI from the pound.
Well, if you're wrong, mate, I'm going to be wrong with you, because I'm in exactly the same boat. I think that what we've seen over the past 24 hours or so is a mystery.
Yeah.
Well, wherever there's been a big rally or fall, there's going to be a correction or at least consolidation. We're probably seeing both of those things.
Yeah.
So, in that regard, there's no huge surprise. Are these going to turn into reversals? I highly doubt it. Really highly doubt it. And really, what I'm looking at is they've provided us with a beautiful price to go in the direction we want to trade, frankly.
Yes, I agree, actually. Yeah, I totally agree, because this is the thing. This level really on the FTSE was not looking like it was going to be on offer. But the fact that we've surged in the way that we have means that taking a trade in this area has been quite good. I mean, I've got another trade down here. I've got a couple in this around here, in actual fact, which I can show you on the actual cash UK 100. So I've got a short here, and then there's a short just. I'm not sure if that relates to the monthly pivot on AXI or not, but it's around about 28 pips below. So one of them is
AXI. That's interesting. What's the AXI story?
Oh, I don't know, but they are being investigated, and it's been I think they've been suspended. Their trading's been suspended with AXI, isn't it? Yeah. And I need to get money out of here, really. But I've got open trades right now, so
yeah, okay.
Yeah, I've got to get money out. I'm really I've been hunting around for somebody else that offers me futures at a fairly decent spread. But
who are within the law and actually pay out and those sorts of things.
Yeah, and this is the concern,
things that go with the broker. Yes.
What it could take, it could be a battle for me to get my money out of AXI, but we'll hopefully that's not going to be the case.
That's interesting. G'day, Ravinder, and hi, LT. Great point. Next week should be critical because of coronavirus incubation period ends next Friday, to see how far it has spread around the world, other people traveling back from China. What a good point.
Yeah, that is a great point. That's a great point. So it's critical next week. Still then meant to work from home.
You're in Hong Kong, Ravinder, aren't you? Is that right? And you're working from home now. You're
I mean, this is what we need to hear about, isn't it? So somebody's there on the street, and what's the actual mood? Yeah, so you're in Hong Kong. So what's the situation in Hong Kong? Are they is there concern about this? Are businesses shutting down, or are they?
It sounds like Ravinder's locked in anyway.
Yeah.
Is that the case, Ravinder? Yeah, interesting.
Yeah. Well, that is interesting, isn't it? And this is the thing. How can that not have an effect? If people aren't, going out and interacting with the economy, then it's going to have a dampening effect. It has to.
Of course, it has to. Yes, there's no ifs or buts about it.
But the question is, I suppose, do people wait until that becomes, stark? Oh, you dropped back to Sri Lanka. Okay, yeah.
Did you have to go through quarantine, Ravinder, or Sri Lanka doesn't really care too much? I shouldn't be flippant about that, but anyway. So back to the point, I guess, and it is a very strong point that Ravinder raises. So next Friday, look out for a correction of some kind.
Yeah, I think so, mate. And because the thing is, if we are looking at big picture, really, aren't we? You know, whenever we're making a decision, we are sort of like trying to add the big picture into a short-term trade. And when it comes down to what's going on with Corona, you know, the other side of the argument is liquidity. You know, and the Fed and everything that they're doing to keep the markets buoyant. And I guess what the question is, what trumps the other? But surely the Fed is going to be a much slower moving entity than a you know a virus, and they're not going to react until the numbers are published. So I would have thought the numbers, you know, and the story with Corona has got to trump what's going on with the Fed right now. But you know, I may well be proved wrong, and this market might continue to ease to the upside, you know, much more comfortably than I would anticipate. So you know, I've got to be aware of that, and I've got to be on my toes a little bit. But I'm just quite interested in the short here, and I'm going to stick with that theory until proved wrong. Now, proving wrong means taking out this neckline. You know, that's where I'll be proved wrong. It takes out that neckline, then well, not necessarily proved wrong. It might be false, but let's say that's what I'm going to use as my barometer to suggest that I probably am wrong. Now, I don't mean just getting above the neckline. I mean getting above it and closing up there, because that's going to suggest that anything back is probably going to ease higher at this particular point. But there are areas of resistance right the way up, you know, because we are ultimately now in a downtrend when we look at the daily chart. Not so much on the longer term time frames, interestingly, but this is the daily chart on the FTSE. So this is a downtrend. There's a lower high there, lower low, lower high, lower low, and potentially a lower high here. But when we flip to the weekly, it doesn't look quite as bearish when we look at the weekly. You know, there's a base point down here that it's managed to hold on to. So it's got to take out the low really to start an intermediate trend to the downside. And this is the monthly. You know, this is the bar that I'm most fascinated by, and this is the bar that suggests to me that I just can't make a case for upside. When I see a bar like this, and that pretty much happened in a day. You know, it was like okay, over a course of a week, let's say, or the last few weeks of the month, but there was a huge shoving down, you know, over a course of a very short period towards the end of the month. And really, it's the end of the bar which interests me the most, you know. So I can't make a case for upside. So
let's backtrack on that for just a sec, mate.
Yeah.
If that happened over the course of a day or a week, as you're saying, then probably it's one thing that drove it, and that's called coronavirus.
Yes.
So, and that's why we're seeing the market right now, as we've just discussed, potentially ignore it. Maybe Ravinder, I can't thank you enough for giving me this point. Maybe until next Friday.
Yes.
Wow.
Yes.
I think that's super important.
Yes, that is. You're absolutely right. Yeah. I mean, let me show you. This is last week's. That's last week's bar. 250 pips to the downside, and when we think that the FTSE 100, you know, it floats around about the 7,300 level, then you're looking at a 25% drop. You know, in a week, 25%. Sorry, a 2.5% drop in a week.
I know what you mean.
In actual, no, what I'm talking about, 3.5%. It's a 3.5% drop in a week. I mean, that is huge, really. You don't tend to get 3.5% drops in a week. You know, people are happy if they make 3.5% in a year. Never mind, you know, cutting out market value like that in a week. So, you know, and the week before was a well, even if we count the bottom, that was a 2% drop. So really, in the course of 2 weeks, we've dropped 5.5% on the FTSE 100. So I just can't say, you know, and we see, look at these indication here anyway. This is regardless of coronavirus. There's indication here. There's maybe even an indication here that we haven't been able to break back to new highs right the way back in 2018. This chart has worried me for a long time. You know, when I looked at this monthly chart, it's worried me for a long time because of the diamond pattern. But the diamond pattern, you know, it kept you know, suggesting that it could refuse the diamond pattern and then eventually not come to fruition. But it's kind of back on again, and And you know, I have to keep flipping my opinion about it because the market, the charts and the market just want to stick around. But that particular pattern is the thing that concerns me the most, and it's an incredibly bearish pattern, and it might, you know, it's a monthly chart, so it might take a long time, it might take another year before this eventually plays out. But if that was to play out, then
weakening there, and there's definite failure to get back to the highs.
Yes,
time. Yeah,
yes,
definitely there, isn't it?
You know, and that brings us right the way down to here. Well, let's say this point here looks like an obvious point, you know. So, and that's depending on when it breaks out. If it breaks out next month, then the measured move looks even more likely. That's all the way down to 6,000 from 7,003. That is a 20% drop in the market that we could see. And regardless of that, if we don't recognise that we do have a diamond pattern forming here, what if we this is way out. There's a monthly chart, so it doesn't mean that we don't go long when there's opportunities. But what if this is what we've got going on? And that would lead us into next year, coming down, popping up, and then coming down again, possibly, or at least testing this low again, you know? So, you know, there's a possibility that we've got a head. This is actually a head of a wider and broader picture. And actually, we should be looking at selling off the market. There's no two ways about it. This market has been going on in its current state, constantly making new highs, and I'm not talking about the FTSE here. I'm talking about the worldwide market. But because, you know, the FTSE, for the FTSE to do that, for the FTSE to collapse like that, the other markets have to either follow or lead. So the worldwide economy has been you know, whether it's been growing or whether it's been artificially growing is another argument. But it has been moving stock markets up and up and up for over 12 years now. So, you know, we're in a state where it should come down. You know, why isn't it coming down? And it's all about liquidity. And there has to be an argument to say when things do fall, there's just not enough tools left. And when there's not enough tools left, then we could see this thing come down hard. I'm not saying we should get in today and just hold on and, you know, take our money in the next few years. But I am saying that we need to be aware that this is still in existence. And you know, even though we've tried to push up and get through, that still hasn't happened. So until we take out this high, really, I'm still a bit cautious about the movements to the upside in the FTSE.
And the problem is, Ash, where else do people put their money?
Yeah, you're absolutely right. And I come back to this all the time. Where else are people putting their money? And because there's no other options, they put them in stocks, which is why I wonder whether it's artificially buoyant rather than being.
I've got no doubt that it's artificially buoyant because a lot of it's on borrowed money, etc., etc.
Yes, yes.
You know, there's no secret to the fact that this is all hoopla at the end of the day. You know, it's not reality. This is.
But this is the thing, do you know, mate?
At the end of the day.
You know, I completely agree about what you're saying with where do people put their money. And I was trying to answer to myself last night, if there is a market crash, then where do people put their money? And I guess they have to go to bonds and safe havens.
Got some left, you mean?
Yeah. If they I guess they put it into protection, don't they? Into bonds and gold and precious metals. But when it comes down to it, those things don't pay a yield. Well, the bonds do, but you know, they're fairly cheap in themselves. They're not much value. But gold doesn't pay a yield. It's just a capital gains value, isn't it? So you know, I almost feel like the guy from The Big Short in a way, calling for this market you know, to collapse and having to hang on until it does it. But
you know, maybe job safe like he's.
Yeah.
The boss going to come and go tap tap tap.
But it is a who knows. You know, the whole thing is a bit of a who knows. But I am a bit concerned about the market and the big picture here, because I do think the big picture could be fairly bleak for a few months, if not a year. And it does happen, you know. We don't need sort of like too much evidence to suggest that we don't get big moves to the downside. This is 2018 from May, down from this point to this point. You know, that's a huge move down. That's I guess nearly 20% drop. There's another one here. There's another one here. You know, and this is over a course of a 10-year period. So we've had 1, 2, 3. So if you like, a third of the time the market does actually kind of hit something of a bear market move, but or at least a decent correction. And I just don't think we've had it. I think this one bar hasn't provided a decent correction. I think that there's still room to travel down, personally.
And everything that, apart from what we just discussed, everything that you consider to be fair and equitable points to that as well. You
Yeah,
know, logic, all those sorts of things that you think
yeah,
about day in, day out, has to point you towards a correction of some sort. You know, it's just so hot, so overbought, etc., etc., etc. But as we said, what else? Where else do they put their money right now?
yes,
And I
yes,
think
yeah.
as
I
soon as
totally
there is an
agree.
option, and that option probably comes back right now, that option is probably gold. It's probably hard assets, or hot metals. What's it, valuable metals, or whatever.
Yeah,
Something that's got an intrinsic value. Maybe that's the only alternative right now.
yeah.
So I think that's why we're seeing gold, go to things like, where are we now, 1550 or something. It's why we're seeing things like 17, 1800.
You're a little bit muffled, mate.
Yeah, sorry, mate.
That's okay.
Is that any better?
That's better. Yeah, yeah,
Yeah. So that's the only sting in the tail, I suppose. Otherwise, why don't we just jump into a short right now on every single commodities market? And
yeah.
that's the reason, because there's nowhere else to put for the punters to put their dough,
Yes,
and
yes.
that's what's keeping it afloat. So
Yes, I totally agree. Interestingly, really, gold is the only one on the comms website. The commercials seem to be quite heavily selling off. So I think gold could ease back a little bit, which you know it does actually add a completely different dynamic to what we've got. And if we've been looking at gold as a safe haven, there is a suggestion that actually gold's going to come off a bit. So if that's to happen, then the markets will probably continue to move higher
yeah, look,
at this point.
strange world we live in. There's no question about that.
Yeah.
And I think next Friday, I love that post, Ravinda. Thank you so much for that. That's really got me thinking now about the coronavirus, and the repercussions of what happens next Friday. Anyways, should we look at some currencies? We've got two
Yeah, let's
minutes
do
to
that.
go before I start trading them, I suppose. Let's take a look. See, Aussie yen is the focal point of my day, my week, potentially my month, depending on what happens. I had three levels to trade this. One was pretty much where we tried to trade it on Monday on a small time frame, a 30-minute time frame, and that one failed. But that was kind of a FOMO trade, as I said at the time. I don't want to miss out on the follow through on this, and of course we did miss out on the follow through because it hasn't happened yet. The second level was probably in this area here, where you could start thinking about a short as well. The third area is pretty much bang on where we are right now. So we've got a resistance trade line, we've got a monthly pivot, we've got a horizontal level historically, where, pardon me, when I say historically, it's recency. We've got a low here that was substantial. We've got a high here that was a kickback. And that's pretty much where we are currently. I'm really, really wanting to see this particular scenario in order to trade this. And if I do, I think I probably spoke about this yesterday. If I do see this, so maybe challenging that level, I think if you replayed yesterday's tape, you'd probably see exactly this. But anyway, let's do it again for those of you who weren't there. Back underneath here, after we hit that level, we don't even have to hit that level. We just have to get above this trend line and then back underneath it. That tells me straight away that this trend line is still intact. That becomes a false break for me, and higher risk, you can trade it from there short. Lower risk, you can trade it from there short, taking profit before the daily pivot because it's untested. and has the ability to throw price bang straight back in this direction. So don't want to see that. Do want to see this. That would be absolutely just what the doctor ordered if I got a breakout here and that became false. Happy days. Then we can return to, I guess, return to trend, which is substantially short. And that is very much the theme of my week, Ash. It's the same on Aussie Swissy, which has already broken that trend line. A little bit less. They're the three levels I have for Aussie Swissy, and the real level, or the absolute last level to trade short from, is this one here. And we're a long way from that. And I'm a little bit concerned that we haven't tested the monthly pivot yet. So there's two, maybe even three levels here that are still yet to be tested. So that would probably keep me wary on Aussie Swissy. But that said, again, if we come back below the broken trend line and the daily pivot, weekly pivot, so if we got something that looked very, very similar to what I've just described, but looked like that, that would get me very interested in the short. Again, higher risk to enter there, lower risk to enter there, both trading at short. Taking profit probably at the consolidation level, take profit there. Then get yourself safe in the market at that point. Then let this one just go, because it can go. I've got no doubt about that. Exactly the same on Aussie US dollar, and the reason is very, very similar to Aussie Swissy, why I'm not ready to go short yet. I've got to get to one of the levels that I think is substantial enough to force this backwards. That looks to me very much like the trend line at the moment. There is a level here that we're currently on that is interesting as well, but I see this probably as a short only to this area here at the moment. After all, we've got a base sitting here, and if this was to come down to this level and put in a higher low, well, we've got to trade back to here. So we could actually go short to get long here, then long to get short. Very complex. Don't try this at home unless you're knowing exactly what I'm talking about. Aussie CAD, upside down really. At the end of the day, my bias being very, very short the Aussie, not necessarily long the CAD, but I think the CAD's got a far better case than does the Aussie at this point. Although I guess when you take oil into consideration, which is just falling out of the sky, or at least it was last time I looked, this becomes an interesting level as well, not dissimilar to what I've described on the Aussie yen and the Aussie Swissy. But from a purely technical point of view, we've had two false breaks of the bottom of this range to date. Why is this not the third? Or sorry, why is this not the second? So a pullback here, exactly the same as on the Aussie, to the daily pivot and putting in a higher low, has got to get me thinking, well, it is actually possible for this to go back to the top of the range. That throws a little bit of a fly into the ointment, so to speak. So the last of the Aussie pairs, Aussie Kiwi, exactly the same as Aussie CAD really, because we are at the bottom of a range. I know it's a very longer term range, and goodness me, I can't even see the top of it, for goodness sake. There it is. Which is what, some 900 pips away. Am I to say this can't happen? No, I'm not, definitely not, because from a technical point of view, we are at a very strong support level, and we've come back into this range again. I think, if this was to break and we come back and retest it, putting in another higher low, away we go. You've probably got to take a long position on that. So that's, I guess the three musketeers, as I call them, Aussie CAD, Aussie, the CAD, and the Kiwi, they're all commodity-based currencies. Why is the Aussie the stronger of the three currently? Can't answer the question. We had Philip Lowe speaking today in front of the press. Maybe I should share with you, Ash, what he had to say. If I can find that somewhere. Not sure I can. Let me say, okay, I do have that here. Let me bring that across. Here's what Philip Lowe had to say. Well, this is the takeaway from it, right? And it says it certainly remains the case that the further reduction in interest rates would help with the balance sheet adjustment of households with existing debt, which should help bring forward the day that consumption strengthens. It would also have a further effect on the exchange rate, which would boost demand for our exports and therefore supports jobs growth. If you were to take that paragraph in context, oh, hang on, I haven't put that in front of you guys. Let me do that. That should help. Okay, so on the if you would take that paragraph in isolation, you would be looking at selling the Aussie in a very quick fashion. However, if you then read on and saw the rest of the speech, on the other side of the equation, though, there are risks in having interest rates at very low levels. Internationally, there are increased concerns about the effect of very low interest rates on resource allocation and their effect on the confidence of some people. Lower interest rates could also encourage more borrowing by households eager to buy residential property at a time. This is probably uniquely Australian because we're so um, ensconced in buying property here at a time when this is already a strong upswing in housing prices in place. If that occurs, this could increase the risk of problems down the track. So there is a balance to be struck here. So we're talking, okay, yes, we want to ease interest rates. That's what they're saying, but the effects of those interest rate cuts are not desirable. So the board recognises that the nature of this balance can change over time and that it depends very much upon the state of the economy. So it is continually looking at both sides of the equation. If the unemployment rate were to be trending in the wrong direction, here's a big clue as to what the RBA will be thinking. If you have a look at the next unemployment rate posted in Australia, I think you'll get a very strong lead as to what the RBA are going to do next. There was no further progress being made towards the inflation target. The balance of arguments would change. In other words, if that unemployment rate goes up, then look out, we'll be looking at an interest rate cut. In those circumstances, the board will see a stronger case for further monetary easing. We will continue to monitor developments carefully, including the labour market, as we seek to strike the right balance in the interest of the community as a whole. I find that very interesting and quite revealing as to what comes next with the RBA. So I don't see any reason why. Whoops, that's not where I want to be. I don't think. La, 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 la. Although it's interesting to look at because that was the Aussie yen, and my analysis on the Aussie yen. When was that? What date was that? Can't even see the date, but that's exactly what I asked for. 74.41. I didn't actually place that trade. La 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 la. Sure where I actually dragged that from. That I think is the chart that we want to share. 74.41. Let me see how that looks. Aussie yen. So we're not there yet. Really? 74.41. Where am I getting that trend line from? The daily chart, perhaps. That's interesting. I should look at that. So that comes through there. How intriguing. I'll have a good look at that and see what I speak. All right, so let's get back to business. So that's why I can't quite work out why the Aussie is rallying as it is, but I'm super glad that it is because I think, as I said, it's going to give me a very good opportunity to trade short. All we have to do is wait, and wait I shall do. And if any of these scenarios were to take place, break back underneath, retest, then I'm away. And if that doesn't work, then guess what? I'm wrong. I've been wrong before, and it won't won't be the first or last time that that's the case. But gee whiz, this is shaping up beautifully for me to get into a short the Aussie pairs. Again, all I need to see is price come back underneath the trend line, retest it, and on the way. So that is my theme, Ash, and I can't see that changing anytime soon, unless, of course, we come back to retest this trade line and can't get back underneath it. Then I have to reassess. I have to rejig everything and wait for maybe another setup up here somewhere. I'm happy to do that, but I'd much rather to see what I foresaw a week or so ago to get back into this market. You still with me? I think I've lost Ash. Goodness gracious, where's he gone? Unless, of course, you guys can't hear me. Can you hear me, guys? Just if somebody can let me know in the chat box, that'd be good. Okay, so it looks like Ash.
Sorry, mate, that was me. Sorry, I was muted. Sorry, buddy.
Okay, so
I was just. Here. Yes, I was I've just hedged my position with a FTSE to the upside because there's been a fairly decent surge up. So just taking a little hedge, and I will look for the next level before coming back again. So we'll see what goes on there. But yeah, just having a bit of protection in the market, which I can show you if you like.
Okay, just before you do, I'll wrap up.
Okay.
So everything is very, very clear for me. It's the only really currency pair I wanted, or currency I want to trade at the moment, because I've got a very strong opinion on it. It's the Aussie, and anything that looks anything like a false break of either resistance, being horizontal or trend line, trade line, call it what you want. As long as I see that, then I'm off to the races short. And as I said, if I'm wrong, then I'll pay the price. But it's got a setup, of course. We shall see. Everything else is I'm a little bit ambivalent about. Dollar yen's come back to the top of our range. That's interesting. If we come back off that and get a lower high, I'd probably be interested in scaling into that. And are we in the pound trade? Not yet. Still stuck. So pretty much me, mate.
Cool. Okay, mate. Well, I'll just show everybody what I've done here. I've just taken a trade to the upside here. With what's been going on with the market, because it is just having a bit of a surge, and it's a pretty impressive surge too. So we have now taken out these highs here, and certainly at this stage there looks like a suggestion that the next port of call from my perspective is probably around about this level here. So so I'm just going to aim for that point before closing out the hedge. Yeah, it looks pretty good, doesn't it? I mean, the only thing that might just drag it a little higher is that trend line, which doesn't potentially get hit until tomorrow. In fact, doesn't it get hit until Friday? So, you know, there's that potential that we could go through, I suppose, which in some respects looks a little bit. In a way, a little bit better, because it means that we also close this gap. So even this level might give way, but for some reason we are surging to the upside. There doesn't seem to be too many problems with the market right now. Looking at the S&P, the same thing's going on out there. Same thing with the Dow Jones Industrials right now, and the same obviously with the Nasdaq. It continues to surge forward and make some fresh highs. Gold is moving lower. So at this particular stage, I think it's probably wise that that a bit of protection is just put in for the downside. I still believe in it, but there's no point in allowing the trade to go too far without putting some protection in. So we'll see what happens there. If the market does collapse instead, then no problem. Then I'll just take the hedge off. But right now, that the hedge is just there, just to give me a little bit of protection.
Happy days, mates. I was just having a thought then, and I'll go back to Ravinder. Ravinder, you said next Friday. Do you mean 2 days' time? I think that's probably makes sense to me. Is it 2 days' time or Friday week?
I think it's Friday, isn't it? Isn't it this Friday?
Nearly have to be, wouldn't it?
Yeah.
I mean, a fortnight would be up.
I would think so. I would have thought so. Yeah.
No, he's saying next week. Okay.
Oh, next week is it? Okay.
Yeah. All right.
All right. We'll see what gives there.
I'm going to mark that in my calendar, and that should be very interesting.
Yeah. I think you're right. Okay, mate. Well, I mean, I think that's us for a wrap. Unless anybody wants to look at anything specific, I think we are pretty much done for the day.
Yeah, cheers, mate. That'd be great. Yeah, only thing, mate, just looking forward. We're still lining up interviews, and I don't know, we've probably shared not much of that with these guys, but we did mention it last week that we are looking at major players around the world of currency in particular, but trading markets and educational type people who are actually serious about looking after their clients. We're currently lining up those people. We're going to have a chat to them live on the show, and maybe expose you to a few different ideas around how people get into and out of markets and why they do it and how they're profitable, and their methodology around getting into and out of markets and making money. Isn't that why we're here? I think so.
Sorry, mate, you got a bit muffled again.
Did I?
Yeah.
It's every time I speak on the wrong side of the microphone. These hyperbolic or something. I think they call something like that. Anyway.
Sounds like a swear word.
Well, it is. Because I don't understand it. So, yeah, look forward to that one. And also, we're still trying to work out how to work out you guys participating in the show by presenting us with your chart or / trade of the week, for which we are hunting down a prize. Maybe one of these interviewees might be able to provide a nice prize for us. There's a thought.
Yeah, quite possibly. It's it's difficult to know what people would value, really, isn't it?
Well, let's ask them. What would you value, guys?
Yeah, have a think. Think for a day. Maybe let us know tomorrow. What would be a decent prize for you guys to have? We're looking at, as Jeff says, the chart of the week. Someone should join the team of the day.
First and front row seat on Richard Branson's is a space flight is probably out of the question.
Yeah, only right now, but yeah.
Scale it back from there, right?
Give it time. Yes. So anyway, we will wrap now. What was I going to say? There was one other thing that I was going to mention, but I can't. Oh yeah, just to remind everybody about the donate as well. The donate button is below. So if you like the show, spread the wealth back to us, guys. This is a completely free show, so you're not obliged to at all. But if at any point you feel inclined to donate, then there is a link down the bottom. But that is it, mate. We'll be back same trade time, same trade channel tomorrow at 5 to 8.
That's the date, and guys, don't be late.
All right, thanks very much, guys. We'll see you tomorrow.
Bye, everyone. Have a good day.
Thanks, Jeff. See you, mate.
Cheers, mate. Bye.